Have you ever wondered what it takes for a retail development to change hands for $87.5 million? Welcome to the Commercial Real Estate Insights Podcast. I'm your host, Steve Hamoen. Let's get right to it. In a significant move in the retail sector, Continental Realty Corporation has acquired CityPlace Doral, a lifestyle retail center located in Doral, a western suburb of Miami, Florida. This acquisition is valued at a whopping $87.5 million. The Baltimore-based company financed this acquisition with funds from Continental Realty Opportunistic Retail Fund ELP, a related co-investment, and a $58.3 million loan secured from a regional bank. The retail center, which spans 235,000 square feet, was delivered in 2017 and is home to tenants such as the Fresh Market, Cooper's Hawk, and Anatomy Fitness. At the time of the sale, the center was 80% leased, indicating a strong tenant roster and a healthy retail environment. The property also features a structured parking garage and a central plaza designed for events, adding to its appeal as a community hub. Representing the seller, PGIM Real Estate, were Danny Finkel and Jorge Portela of JLL, while Michael DeCosimo and Maddie McMillan from JLL's debt advisory team arranged the acquisition loan. This acquisition adds to Continental Realty Corporation's growing portfolio, making it their 13th retail center in Florida, with properties spread across locations such as Fort Myers, Lakeland, and Orlando. While this deal highlights the bustling retail market in Florida, it also serves as a point of comparison for Canadian investors, particularly those in areas like Kitchener, Waterloo, and Cambridge, Ontario, where retail development is seeing steady growth. This cross-border perspective is crucial for understanding market dynamics and opportunities. In a notable industrial real estate transaction, a logistics company has secured a lease for half of a speculative warehouse project, marking one of the year's largest leases. The lease involves 181,000 square feet of the 361,770 square foot development located in Bear, Delaware. This transaction underscores the robust demand for industrial space in the region, driven by the growth of e-commerce and the need for efficient distribution networks. The development, a joint venture by the Davis Companies and J.G. Petrucci Company, Incorporated, is strategically located to serve the Mid-Atlantic corridor, providing logistics firms with easy access to major transportation routes. This location advantage is a significant draw for companies looking to streamline their supply chain operations. While the industrial market in Delaware is experiencing growth, similar trends can be observed in the Kitchener, Waterloo, and Cambridge areas of Ontario, where industrial leasing activity is also on the rise. This cross-border comparison highlights the universal appeal of strategically located logistics hubs, as businesses increasingly prioritize proximity to key markets to enhance operational efficiency. This transaction not only emphasizes the strength of the industrial sector in Delaware, but also serves as a benchmark for Canadian investors seeking opportunities in the logistics space. Understanding these dynamics can provide valuable insights for investors aiming to capitalize on the burgeoning demand for industrial real estate on both sides of the border. In a significant development for the Cherry Creek neighborhood in Denver, two prominent construction firms are set to lead a transformative redevelopment project that promises to reshape a substantial portion of the area. This project, which has been highly anticipated, is expected to bring about major changes to the neighborhood's landscape, offering new opportunities for commercial and residential growth. The firms involved in this endeavor are well respected in the industry, known for their expertise and successful track records in handling large-scale construction projects. Their collaboration on the Cherry Creek West redevelopment is seen as a strategic move that could set a new standard for urban redevelopment in the region. This redevelopment project is particularly noteworthy as it aligns with broader trends in urban development, where mixed-use spaces are becoming increasingly popular. By combining residential, retail, and office spaces, the Cherry Creek West redevelopment is designed to create a vibrant community hub that meets the needs of modern urban dwellers. While the Cherry Creek West project is a major development in Denver, similar trends can be observed in Canadian cities like Kitchener, Waterloo, and Cambridge, Ontario. These areas are also experiencing a surge in mixed-use developments, driven by a growing demand for integrated living and working spaces. For Canadian investors, the the Cherry Creek West redevelopment serves as a valuable case study in urban transformation. By examining the strategies and outcomes of such projects in the United States, investors can gain insights that could inform their own ventures in the Canadian market. This cross-border perspective highlights the universal appeal of mixed-use developments and their potential to drive economic growth and community revitalization. Publicly traded Industrial Logistics Properties Trust has announced a strategic move to refinance a significant portion of its commercial property portfolio, amounting to a substantial $1.2 billion. This refinancing effort covers nearly 25% of the trust's holdings, showcasing their robust position in the industrial logistics sector. The decision to refinance is bolstered by the strength of the Honolulu market, which is a key component of the trust's portfolio. The largest property in this portfolio by appraised value is located at 996 Paragon Way in Rock Hill, South Carolina. This move is indicative of the ongoing demand and growth within the industrial logistics space, as companies seek to optimize their real estate assets in dynamic markets. In Canada, particularly in the Kitchener-Waterloo and Cambridge areas of Ontario, we are observing similar trends where industrial spaces are in high demand. This is fueled by the need for efficient distribution networks to support burgeoning e-commerce activities. The refinancing strategies employed by firms like Industrial Logistics Properties Trust can serve as a model for Canadian investors looking to leverage their assets in the industrial sector. The cross-border relevance of such refinancing efforts is clear, as Canadian investors can draw parallels with the American market strategies. By understanding how Industrial Logistics Properties Trust is capitalizing on market strengths, investors in Ontario can gain insights into optimizing their portfolios amid similar economic conditions. In an ambitious initiative, a Louisville-based firm is set to raise $50 million to expand its portfolio of apartment complexes. The focus of this endeavor is on an often overlooked segment of the apartment market, which presents untapped potential for growth and development. This strategic move by the firm underscores a growing trend in the multifamily real estate sector, where investors are increasingly seeking opportunities in niche markets. By targeting specific segments that have been traditionally underrepresented, the firm aims to capitalize on the increasing demand for diverse housing options. The Louisville firm plans to leverage its expertise and resources to identify and acquire apartment complexes that offer both affordability and quality living conditions. This approach not only addresses a critical need in the housing market, but also positions the firm as a leader in innovative real estate investment strategies. In Canada, particularly in the Kitchener-Waterloo and Cambridge areas of Ontario, similar trends are emerging in the multifamily sector. Investors are recognizing the benefits of diversifying their portfolios by including properties that cater to various demographics and income levels. This cross-border perspective highlights the universal appeal of multifamily investments as a means to drive sustainable growth and meet housing demands. For Canadian investors, the initiatives undertaken by the Louisville firm serve as a valuable case study. By examining the strategies employed in the American market, investors can gain insights into how to effectively navigate the multifamily sector and identify lucrative opportunities in their own regions. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.